We have another transaction here which is a little bit more complex. So you went through a number of easy transactions. Now you just got a couple that are a little bit more complex. Now this one is returning, that's us, we're returning 2 computers to hardware suppliers that we purchased on the 14th of June. So there might have been something wrong with them. I'm presuming that's why we returned them. So what's this going to impact upon? Well, it's going to impact upon our inventory. So yes, our inventory is going to go down. Will it impact upon GST? Yes. When we made the purchase, we also had to add an amount for GST on top of that. So now we're going to have to take that amount off. So GST will be involved. Will it involve a subsidiary ledger? Yes. It will be the accounts payable subsidiary ledger. Oh good, I can see why these are a problem now. Balance due for Orange computers by using note payable, so that'll be an account payable, and cash receipt Arthur funds, that'll be an account receivable. Right, I didn't complete them properly as well, they didn't go green. So this will involve account payable. Now what's journal is a little bit more of a challenge. Does it involve the purchase on, does it involve a sale on credit? No. Does it involve a purchase on credit? Well, no. The original transaction was a purchase on credit, and you could possibly argue that this is a negative purchase because we're returning, but it doesn't actually go there. That's possibly viable, but it's not what we do. Does it involve receipt of cash? No. Payment of cash, so this is going to be the general journal. This would probably also put a working paper together for, but let's firstly go to inventory because we're returning 2 computers from hardware suppliers. Righto, 2 computers, hardware suppliers, transaction of the 14th. We paid 1,735 for inventory. Quantity, this is -2. This is where the minus comes in. 1,735, yep, it's the same amount as there. What's the amount? It's going to be a deduction. Minus 3570, 3470. So what happens? We'll continue to add these on because effectively we're deducting them. But so this column equals that column plus this column, and that's a minus. The total is this column plus the total cost, and the total cost is a minus, so this will fall. So our average price will now change. The date, I think this was the 30th of the 6th, 2013. So that's done. So we can see 3470 is the amount inventory changes. So we go back to the transactions, and we've got working. Actually, you probably don't even really need a working paper. Let's go straight to the general journal. We received credit for 2 computers, returned 1. Righto, go straight to the general journal. So what's going to happen? June 30. Now our account payable is going to fall. Payable, this was hardware supplies. So it's going to be a debit because our accounts, if a credit falls, it will be a debit. Then our inventory is going to change, and we've already worked out what that is. And then GST will change. So inventory is going to be, I'm going to put in a minus here because we've recorded this as a minus over here. So that will make it a plus. So inventory is 3470. You can just write in 3470. We know our GST is going to be 10% of this, 347. So therefore our accounts payable is going to fall by these 2 amounts added together. This will be item G2, and this will be return of 2 computers to hardware supplies. And this is probably where you would put a note of, because they were defective, or whatever the reason was. And that could also be included on a working paper somewhere, which we don't really cover in this unit. Righto, let's post this to the subsidiary ledger. So subsidiary ledger, hardware supplies 3817, subsidiary ledger, accounts payable, hardware supplies, June 30, a return, this will be G2, and the amount, we'll get that out of the general journal, 3817. So, whoops, I put that in the wrong column. This is our general journal, 3817. This amount is in fact falling, so it's a debit. So we see go to the general journal, debit, accounts receivable, we get accounts payable. So subsidiary ledger, debit, accounts payable, 3817. So what we owe to hardware suppliers will fall by 3817. Now we go to the general journal and we put in a T. It won't go green just yet because we need to now post this to the general ledger. So general ledger, accounts payable, and this now we're going to our control account. So down to the liabilities, we have assets, then liabilities. So June 30, return, G2, the amount, 3817. That's done. Now fix up our journal. So 146,600 minus 3817. So we can go back and post this to account 202. Indicate we have posted to 202. General journal. So same as that one. 202/T. Now we also need to reduce our inventory. So inventory 3470. Inventory is an asset, is a current asset. I can say that again. Inventory is an asset, it's a current asset. On June 30, G1, it fell, so a credit, by $3470. Again, so we've got the opening balance less what it fell by, now 232 and 30. So 120 we can put in the general journal. Now it's probably quicker for you just to write in there 120. GST, let's go to GST 347. So this GST, it's a credit. So why is it a credit? Well, previously hardware suppliers had said they'd collected, or they were going to collect $347 from us for the tax office, and now they're not going to collect that anymore. So we don't have that credit of $347 with the tax office. So our asset with the tax office is going to reduce by $347, or if we have a liability to the tax office, it will increase by $347. So if we go to the general ledger, we'll have GST receivable or payable will be $347 credit. So now we owe more money to the GST, to the ATO for GST, and that's account 240. So that transaction is now done. Let's go to the next transaction. We finish off with three reasonably straightforward transactions. Pay salaries, cash payments, no inventory, no GST. GST is not payable on salaries. So, special journals, cash payments, June 30, sales salaries, 616, cash at bank, how much are we paying? We're paying sales salaries of 8250. 8250 will be credit to the bank, it'll go down, and salaries net of GST and other accounts will be 8250. Now, if we'd had a special column for sales salaries, that would have gone in there. But because we don't have a special column for sales salaries, for office supplies or rent, they go in the other column, and then we post them through the posting reference. But we'll talk about that a little later. The next item will also be reasonably straightforward. June 30, pay office salaries of $3,000. Check 617. 617. Office salaries. June 30, you can write it in, I'm just filling down, Control D. $3,000 and $3,000. Final two items will also be June 30, so I'll just to fill those down, Control D, go back and have a look at the transactions. Owners paid $2,500 each by direct debit, direct bank transfer. So this is a payment, though not a payment using a cheque. So I go to special journals, cash payment, direct DD, see if that works, and bank transfer. I'll leave that out for the moment. So there will be, let's find out the accounts. They're drawings, so we'll go to the trial balance, opening, and we see we've got A Noble Drawings, account number 306, and the next one will be B Noble Drawings. So I can just fill that down. The amount is $2,500 each. So that's 2500, 2500, and other accounts 2500 and 2500. I know that's now recorded all of our transactions. The next video I come back, we'll finish off some of these totals and do end of month posting. So we might just look how we're going on the progress dashboard. Well, we can see we're getting towards halfway complete in terms of number of entries we make. We're pretty good progress on the worksheet. The only problem here is dates are not being picked up for some reason. I'm not sure of why that is, but we have put the dates in and they do seem to be working. So a little bit on totals. I'll have to go and check a total at some stage. We can see the special journals, we're making really good progress, almost finished. Subsidiary ledgers, we're making really good progress. General journals not showing up here, which probably means I have a problem because we have done some general journal transactions. We've done nothing yet on the worksheet or the equity statements, balance sheet ratios, bank reconciliation. So again, we can also look at the progress report, and we see special journals getting close to finish, inventory worksheet pretty much finished. The only reason that is not correct is there's one date there. So our inventory worksheet is finished. Whoa, that's a good one. And subsidiary ledgers are very close to being finishing. What they're not being done, we'll have to come back and do this, would be transferring all the balances into the balance column in the end, and then finally probably checking to the control account in the general ledger. So we're making good progress. Now we go back and we next step will be back to the special journals and just finishing them off and posting them.